Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1608A, and today's date is July 5th, 2018, and the title of the episode is The Fed Takes the Next Step, Hides Its Information from the Public. Now, before I get started, I just want to make an announcement. I placed a new interview on the X22 Report Spotlight YouTube channel. It is with Louis Camarasano. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It will bring you right to the interview. Or you can come over to the X22Report.com or NewSentinel.com site. Scroll down a little bit, look over to your right-hand side. You'll see the interview there. You can play it right on the site. Or you can go to Steemit. That is steemit.com/@X22Report. And you can play the interview right on Steemit. Let's get into the economic collapse financial news. Now, blockchain technology, it is in the beginning stages, and we're starting to see many more countries look at the blockchain to use it in many different areas, one being voting, because you have to remember this is a ledger system, it's a truth-based system, and you can track everything down. This is why when the central banks come out and say that terrorists are using cryptocurrency, using the blockchain, they're taking funds and using it. Well, it's very difficult because you can track all these funds. Not like cash or the money laundering that goes on in the big banks, but cryptocurrency, the blockchain system, it is based on a ledger system diversified around the world, decentralized around the world, and you can pretty much track everything that goes on. And we see right now, Switzerland, they decided to use the blockchain for voting. And the city of Zug completed its first trial municipal vote using blockchain. The vote was held using a trial ID system. City authorities used the system since 2017 to issue digital identities to residents. They used the blockchain technology to handle the entire voting system. Now, Zug is a cryptocurrency and blockchain hotspot in Switzerland. It's right outside of Zurich, and it implements a very business-friendly taxation scheme along with favorable laws for business, and as a result, houses tens of thousands of companies earning the name Crypto Valley. Now, you heard in California, there's a place called Silicon Valley. Well, in Switzerland, this area is called Crypto Valley, and currently is home to over 200 blockchain companies. It is also the home of the Ethereum Foundation. So, cryptocurrency is going to be used for many different things, not just one thing, because it could be used for many different things, and it is a truth machine. If you want to know more about cryptocurrency, you want to learn what cryptocurrency is, you can go to the X22ReportSchool.com. It will bring you to a website, and there are training videos that you can view. Read the website. Yes, it does cost money. You can also go into the trading room where you can watch traders trade cryptocurrency. That is if you are comfortable with cryptocurrency, you own cryptocurrency, you want to know how to trade it, where to go to trade it, how to cash out. This would be a great place, and there are professional traders in there that are trading, and it's an entertainment room, and you can follow what they're doing. Yes, to belong to the trading room, it does cost money to join. And again, the website is X22ReportSchool.com, and it will bring you to this area, and you can choose what you want to look at on the website. Now, ADP, they just released their job information, and ADP printed that the U.S. economy added around 177,000 jobs in June. Now, they missed expectations right now for the fourth straight month in a row. And what we're seeing is they're out there trying to convince us, and this is coming from Mark Zandi, chief economist of Moody's Analytics, the big problem right now is that they can't find qualified workers. There's a shortage of workers right now. Now, this is very interesting, and we discussed this before. If there's such a shortage and they can't find qualified workers, salaries would be skyrocketing right now. Because, again, it has to do with demand and supply and demand. And if you don't have the workers, guess what? You're going to have to raise the salary to find those qualified workers. If you don't raise the salary, is there really a shortage? We saw this in the past. When you couldn't find the right people, salaries went up. We're not seeing that right now, which is strange in itself. And we discussed this in previous reports, which tells us something is wrong with what they're telling us. And once again, a lot of these numbers are manipulated. When we look at the retail industry, we see that the retail apocalypse, well, it is continuing. Now, we know that Toys R Us, they just went out of business. 33,000 people will be looking for business, and that means there's going to be a lot of commercial real estate that is completely vacant. And we'll get into the vacancy and how they figure this out in just a bit. But what's very interesting is that 2018 looks like it's going to beat the record that has set last year for the number of store closures in a single year, if the second half continues to grow with new announcements at the rate it has been growing. Now, the report is saying that they're expecting around 12,000 stores to close this year versus last year's 9,000. So the retail apocalypse has not ended. We're just at the midway point right now, and it looks like it might beat out last year's. Now, when we look at these vacancies, we know that there's a lot of stores that have closed. We see that Claire's, Nine West, Bon-Ton, Toys R Us, Charming Charlie, True Religion, Rue 21, Gymboree, Payless, H.H. Gregg, Gander Mountain. We see Direct Buy, American Apparel, Golfsmith, Aeropostale, PacSun, Hancock Fabrics, American Apparel, Quicksilver, and the list goes on and on and on. And we see there's been a lot of store closures, and there's going to be even more. So when we look at the vacancies, we see that there is a lot of retail space that is out there. And of course, Toys R Us, as we know, closed down, and we can see that Babies R Us, Toys R Us, and all the stores associated with this, they're now empty. And when we look at this, we see that if we just combine Bon-Ton with Toys R Us, we see there's nearly 6 million square feet of retail space, and every square inch is now being vacated. Now, we need to take a closer look at these numbers because these numbers are deceptive, and it's almost like the unemployment numbers, the GDP numbers, and every other number that we look at. Because when you count something as vacant, it's only when the landlord tries to fill it with another retailer. Stores that emptied out and became zombie stores in zombie malls, or the Toys R Us stores in bad areas with zero hopes of finding another retail tenant, they're not being counted as vacant retail space because they're no longer being marketed as retail space. And the square footage of that retail space disappears from the vacant retail space stats. So when we look at stats and we look at all these different types of numbers, they're finding ways to calculate this to make it look like everything is a lot better than it really is. So when we see that Toys R Us is closing down and we see Bon-Ton and all these stores closing down, and the corporate media comes on there and says, wow, vacancies, that really hasn't affected the vacant retail space. Well, you know how they calculated the number, because most of the time people go, well, this doesn't even make sense. We have all these stores closing and the amount of retail space that are vacant, it's not going up. It makes no sense. Now you know why. So when we look at this, we see that this whole thing, again, is fake, phony, and false. So as more and more stores close down, guess what? You most likely will not see the number of retail space, the vacancies, go up. Because remember, the only time they count as vacant is when the landlord tries to fill it with another retailer. Stores that emptied out and become zombie stores in these zombie malls, and they have no hope of finding another retailer to come in, well, they're not counted because they're no longer being marked as retail space. This is how they're getting around all of this and making it seem like it's a lot better than it really is, but it's a lot worse than everyone thinks. Same thing with the housing market. I mean, we had hedge funds and investment companies purchase homes, keep them off the market, rent them if they can. If not, do not sell them. We had banks, they didn't foreclose because then they would have to put them back on the market. So they just let the people live in the house even though they were foreclosed. It was nice for the people, but this way they could push the bubbles up. But what are we seeing right now? We're seeing mortgage applications, they're falling. Refinancing hits a 20-year low. People aren't going out and purchasing the homes. It's all starting to fall apart. And we know that the corporate media, the mainstream media right now, they are prepared and ready to push the propaganda. And we saw it out of the Wall Street Journal. We saw it out of the New York Post. And now we have out of Business Insider, where they're starting to ramp this up a little bit here. This is with the Fed right now, where the Fed is being reported to say they are very worried about Trump's tariffs. Now remember, I told you there was going to be this battle between Trump, the Patriots, and the central banking system. And the Federal Reserve says that since Trump is pushing these tariffs with China and everything else and with Europe, guess what? This could wreck the economy. And this is in the minutes of the Fed's March meeting. It shows that officials saw trade rifts between the U.S. and China as risks to the economy, to the economy's growth, and it could wreck it. And it's now an article in Business Insider, and they're putting it out there, and you can see what they're doing. They're building the propaganda right now to control the narrative. Now, the Fed took this to the next level. Now, remember, the central banks, they don't want to be blamed for this next crash. What do you do if you don't want anyone to know or understand who caused the crash? You get rid of data. You get rid of information that is normally available to the public, and this way nobody could track it. Well, what did the Fed just do? They decided to discontinue reporting on the Fed's balance sheet normalization. Remember, the Fed is raising rates right now, and they are unwinding. They have about $4.5 trillion or so worth of toxic assets on their books. They're trying to unwind them and get rid of them. So what did they do? They got rid of the Fed balance sheet normalization. It's going to be discontinued off of the Fed website. Now, the data is still available on various data terminals, but the main graph that you see from Fred, that will not be there. Why? Because they're trying to hide as much as they possibly can so nobody catches on to why the economy is failing. Think about this for a second. As they raise rates and they speed up the unwinding of their balance sheet, what happens to the economy? It starts to break down. We've been watching it. It's starting to break down. The housing market is starting to decline. We're also seeing it decline in Canada, Australia. It's going to happen everywhere. We're seeing mortgage applications, refinance applications. They're declining. And they don't want the average person accessing Fred to see the normalization accelerating. Because, you might put two and two together and you might start to realize that the economy's breaking down, their unwinding is accelerating, and people might be looking at this going, that's a correlation. Well, they don't want people to do that. They also don't want the average person who accesses Fred to see the normalization accelerating, and they might notice that the smart money might be piling out of the stock market as it's selling to the everyday person. They're trying to hide pretty much everything they do, and they don't want anyone to understand that they're the ones who are going to rip this economy apart. They understand that the economy can't stay together anymore. Their system is not designed to last. And with the mainstream media, they're preparing a narrative right now, and you can see how it's forming right in front of you, where the mainstream media, they're out there, and you're seeing a couple of articles that are coming out. This is going to speed up now. You see the Fed hiding data. They'll probably hide some more, so you can't, make heads or tails of what's going on here. And they're going to continue to do this until the system breaks down and they can control the narrative. This is what they want to do. On the other side, again, we have Trump and the Patriots, where they're going to try to control the narrative. And this is going to be a battle to the end. But one thing is for sure is we're going to be going through this transition, and you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.